Tesla stock is taking a beating, and Elon Musk is facing his biggest public backlash yet. The once seemingly unstoppable electric vehicle giant is now struggling as its shares continue to tumble. On the streets, protests are erupting across the world, from New York to Berlin, as demonstrators rally against Musk and his growing influence. Tesla showrooms are being forced to shut down due to mass boycotts, and activists are making it clear that they see Musk as more than just a CEO. They see him as a symbol of corporate greed and political controversy. So why is this happening? And more importantly, how bad can it get? Stick with me because we're diving deep into the numbers, the outrage, and what this means for Tesla's future. Tesla's stock crash. Tesla's stock has always been known for its wild swings, but February marked one of the company's worst months on record. The stock price tumbled sharply, leaving investors in shock as billions of dollars vanished from Tesla's market value. The numbers are alarming. Shares have dropped in just the past month alone, and compared to last year, the stock is now down. This steep decline has also taken a massive hit on Elon Musk's personal wealth, which is heavily tied to Tesla's valuation. Adding to the growing concern, Tesla recently hit a 52-week low, raising serious questions about the company's long-term stability. Once considered untouchable in the electric vehicle market, Tesla now faces increasing pressure from competitors like Rivian, Lucid, and BYD. With sales numbers fluctuating and demand showing signs of weakness, some analysts are beginning to wonder, is Tesla's dominance in the EV industry starting to crack? But here's the kicker, it's not just financial troubles driving this downward spiral. Tesla is facing a crisis unlike anything before, and it's not just about sales or stock performance. A massive PR disaster is unfolding, fueled by relentless protests and Musk's increasingly controversial public actions. The brand, once synonymous with innovation and progress, is now at the center of heated debates, political controversies, and widespread backlash. The big question now is, can Tesla recover from this perfect storm of financial instability and public outrage? Or is this the beginning of a much larger decline? Let's dive deeper into the protests and the growing movement against Elon Musk that's putting Tesla's future at serious risk. Protests explode worldwide. What started as online criticism has now turned into full-blown, real-world protests. Anti-Tesla demonstrations aren't just trending on Twitter anymore. They're happening outside Tesla showrooms, on factory floors, and even at SpaceX facilities. In just the past week, protesters have stormed Tesla dealerships in New York City, chanting "Boycott Tesla," while holding banners that labeled Musk a fascist. In San Francisco, Tesla's own employees walked out in protest, voicing their outrage over Musk's latest controversial statements, signaling internal turmoil within the company. Meanwhile, across the Atlantic, demonstrators in Berlin blocked the entrances to Tesla's Gigafactory, accusing Musk of exploiting workers and harming the environment. Even in London, the movement has taken a new form, with anti-Tesla ads appearing across the underground transport system, boldly stating, "Hate doesn't sell, just ask Tesla." And this wave of unrest is no longer just about Tesla's business practices. At its core, the backlash is being driven by a perfect storm of politics, corporate ethics, and Elon Musk himself. His polarizing presence, unpredictable decisions, and unfiltered social media activity have turned him into a lightning rod for criticism. What was once admiration for Musk's bold, risk-taking persona has now shifted into growing resentment among consumers, activists, and even Tesla's own workforce. The protests are no longer just about Tesla as a company. They are about Elon Musk as a public figure and the power he wields. And as the demonstrations grow in size and intensity, one question looms: can Tesla survive the storm? The Elon Musk factor. Elon Musk isn't just Tesla's CEO, he is Tesla. His name, his vision, and his larger-than-life persona are deeply intertwined with the company's success. For years, his bold leadership and risk-taking attitude helped propel Tesla to the top of the electric vehicle industry. But as much as his influence has fueled the company's rise, it is now becoming one of its greatest vulnerabilities. Every move Musk makes, every tweet he posts, and every opinion he shares has a direct impact on Tesla's stock price and public perception. Lately, however, Musk has been making headlines for all the wrong reasons. His controversial tweets on sensitive political topics have sparked outrage, dividing public opinion and alienating large portions of Tesla's customer base. At the same time, his deep involvement with Dogecoin has fueled accusations of market manipulation, with critics arguing that he's using his influence to personally benefit from the cryptocurrency's fluctuations. And then there are his ongoing feuds, not just with Tesla employees, but with journalists, politicians, and even government regulators, further tarnishing the company's image. Whenever Musk finds himself at the center of controversy, Tesla pays the price. After one particularly inflammatory post, Tesla's stock plummeted, wiping out billions in market value in a matter of hours. A similar scenario played out when Musk publicly supported President Trump, triggering a massive sell-off that resulted in a staggering billions of dollar loss for Tesla. The damage to Tesla's brand is undeniable, and investors are starting to ask a difficult question. Is Musk hurting Tesla more than he's helping? What was once seen as his genius and charisma is now being viewed by many as reckless and unpredictable. As the backlash against him intensifies, the company's future may depend on whether Musk can rein himself in or whether his personal brand will drag Tesla down with him. Investors are losing faith. Investors have always been key to Tesla's meteoric rise, but now many of them are starting to lose faith. Once seen as an unstoppable force in the electric vehicle market, Tesla is now facing skepticism from analysts and major financial players. And the biggest reason, it's not just competition or market conditions, it's Elon Musk himself. Gary Black, a well-respected investor and analyst, recently stated, "Tesla's biggest problem isn't competition, it's Elon Musk. The more he polarizes people, the more he damages Tesla's brand." This sentiment is echoed by Jim Chanos, a famous short seller known for uncovering financial disasters. He compared Musk to the ultimate retail Pied Piper, warning that the real question isn't whether Tesla will survive, but how much longer will people follow him. These statements highlight a growing fear among investors. Musk's erratic behavior is becoming a liability, and his personal controversies are overshadowing Tesla's innovations. But this isn't just talk. Real money is leaving Tesla at an alarming rate. Major investment firms have already dumped millions worth of Tesla shares, while a leading hedge fund recently slashed its Tesla holdings, calling the stock's valuation unsustainable. Even some of Musk's most loyal financial backers are now reconsidering their positions, signaling a shift in confidence that could have lasting consequences. Beyond the drama surrounding Musk, Tesla's financial fundamentals are also slipping. Revenue growth, once one of Tesla's strongest selling points, is now slowing. Meanwhile, competitors like Rivian, Lucid, and BYD are catching up fast, offering high-quality electric vehicles that challenge Tesla's dominance. To make matters worse, Tesla has been forced to cut prices on several of its models, a clear sign of weakening demand. For a company that once boasted long waiting lists and premium pricing power, this shift is a red flag. If demand continues to decline, Tesla's stock is in serious trouble. Investors aren't just worried about short-term fluctuations, they're questioning whether Tesla can maintain its industry-leading position in the long run. The more Musk's controversies pile up and the more Tesla struggles to defend its market share, the harder it will be to regain investor confidence. And if the stock continues to slide, the fallout could be even bigger than anyone expects. The protesters plan to crush Tesla. The backlash against Tesla isn't just spontaneous outrage anymore. It's turning into a well-organized movement with a singular goal: hit Elon Musk where it hurts most, his wallet. What started as sporadic protests and online criticism has now evolved into a coordinated campaign aimed at destabilizing Tesla's financial foundation. This movement, dubbed the Tesla Takedown Campaign, is gaining momentum, and if it continues to grow, the impact on the company could be devastating. And one of the primary tactics being used is an all-out boycott of Tesla and Musk's affiliated businesses. Protesters are urging consumers to stop buying Tesla vehicles and avoid products tied to Musk's empire, including Starlink and SpaceX services. The logic is simple: if Tesla sales drop significantly, it will put financial pressure on the company and send a clear message that consumers won't support a brand associated with Musk's controversies. Beyond consumer boycotts, activists are taking their fight directly to Tesla dealerships. Protests outside showrooms have already forced temporary closures in major cities, disrupting sales and damaging Tesla's public image. These physical demonstrations serve as both a logistical nightmare for Tesla and a powerful symbol of resistance, showing that discontent with Musk and his business practices is no longer confined to the internet. Meanwhile, the campaign is also gaining traction in the digital space. The hashtags number Tesla takedown and boycott Tesla have been trending worldwide, flooding social media with anti-Tesla sentiment. Influencers, activists, and even some former Tesla supporters are amplifying the movement, spreading messages that paint Musk as a corporate villain whose actions should no longer be tolerated. In the age of viral outrage, public perception can shift rapidly, and Tesla is now caught in the storm. Perhaps the most aggressive strategy of all is the call for investors to sell off their Tesla shares. Online forums, Twitter threads, and viral posts are encouraging retail investors to dump their stock, aiming to accelerate Tesla's stock decline. One tweet that gained significant traction summed up the movement's strategy. Want to hit Musk where it hurts? Dump your Tesla stock, sell your Tesla, cancel Starlink. If enough investors take action, the stock could spiral further downward, intensifying the company's financial troubles. The big question now is, can this actually work? If Tesla's public perception continues to deteriorate, the company's stock could face even greater losses. While Tesla has survived volatility before, this time feels different. The opposition isn't just from financial analysts or rival companies. It's coming from everyday consumers, activists, and even former supporters. If the movement keeps growing, Tesla may find itself in the middle of a financial and reputational crisis that even Musk himself can't talk his way out of. The big question, can Tesla survive this? Tesla remains a dominant force in the electric vehicle industry, but the cracks in its foundation are becoming harder to ignore. Once hailed as an untouchable leader in innovation, the company is now facing some of its biggest challenges yet. The stock is in freefall, the brand is taking a beating from protests and boycotts, competition is catching up, and Elon Musk's unpredictable behavior continues to create uncertainty. With so many factors working against Tesla, the real question is, can Musk turn things around before it's too late? Right now, the obstacles seem overwhelming. The company's stock price is tanking, wiping out billions in market value and shaking investor confidence. Meanwhile, the Tesla brand, once a symbol of cutting-edge technology and sustainability, is now being overshadowed by political controversy and consumer backlash. At the same time, Tesla's competitors, companies like Rivian, Lucid, and BYD, are rapidly improving their EV offerings, narrowing the gap that once made Tesla untouchable. And at the center of it all is Musk himself. His erratic behavior, controversial statements, and ongoing feuds have turned him into Tesla's biggest liability rather than its greatest asset. Yet despite all these challenges, Tesla isn't down for the count just yet. The global EV market is still booming, with governments pushing for greener alternatives and consumer interest in electric cars continuing to rise. Tesla's technology is still years ahead of most competitors, giving the company an edge in battery efficiency, charging infrastructure, and autonomous driving. If Musk can refocus on the company's core mission, rather than engaging in political battles, there's a chance that Tesla could regain investor trust and stabilize once again. But that's the billion-dollar question. Will Musk actually step back? History suggests that he won't, as he thrives on controversy and attention. If he continues on his current path, Tesla's future remains uncertain. But if he somehow reins himself in and shifts the focus back to innovation and growth, Tesla could not only survive this crisis, but emerge stronger than ever. The next few months will be critical, and the world will be watching to see whether Tesla can weather the storm, or if its era of dominance is coming to an end.